Hello, Face. How are my trading warrior brothers and sisters doing today? Hope you had a great weekend. Hope you did your work, recharge your battery, and you're ready to have a great week. Everyone in here ready to have a great week? Give me a Y. That every trade we take this week, we're not going to hear ourselves think, I hope this one works, but instead we'll be thinking, Mr. Market, I spent a lot of time this weekend. I've done my work. Prove me wrong. Who's a warrior? Dennis is. Forex Gal is. Ziggy is. Okay. So don't challenge the market. Don't be challenged by the market. Okay. So let's see what was challenging about the dollar last week and what may still be challenging. A lot of people were talking about a 95 breakdown. We had this false breakdown. You know, I saw it. We were here. I said, well, if this is a breakdown, why are we sitting here just, 10, 12 pips underneath it without accelerating? And then, so we shook out these guys, right? And then we rallied all the way back, but the only difference between here and here is that this high right here at 609, they left these stops at 616 unelected. So are we going to shake out the bulls too by taking out 96.20? I think there's the possibility, the way the dollar's trading here, you had a reversal week down that screwed up a lot of people, and then we had an up week last week. The 2-week off numbers, 95.67, not too far underneath where we are. So it is possible that we end up failing here. And I think that the way the market's positioned, at least right now, that it could be a sale between here and 95.90. And at the minimum, maybe you get, this was A and this is B, some type of 3-wave pattern, which could end up putting in a top. So if you'd noticed, EG is working like a charm. It shook out everybody. A lot of people are still going to say this is only a bear market rally in EG, and they still could be right. But look where we're back to. Okay, the big candle was here, right here, and this is when people threw in the towel. Right around where we're at now. So my contention is that this is going to be just a shakeout move, and if we start closing back over 88.40, we might have something like this to eventually, I'm not going to give up on this formation. What's missing here in euro pound? And it's kept me looking for the long side since it's high, and there's been a lot of frustration when it was doing nothing. And, I've caught some rallies, and then this was a good rally. And then I was wrong when I was buying the dip against this low. But, we had 2 weeks underneath this. Also, how interesting on the weekly, I believe that's the 50-week that it's bumping its head against right now. And this really wasn't, I don't know if you would call this pullback impulsive. I'll ask Steve. It doesn't look like it. It looks like just a simple ABC. Nothing, impulsive like this is impulsive or this is impulsive. So I think there's a chance that this is going to turn good. And in the upcoming weeks, I don't know, maybe I don't think it's going to be as much of a case of the dollar weakening severely, although I could still see 93 coming if we peak up here in the Dixie. But it might be, just a big failure in the pound. I know Stell likes it, but, if something doesn't happen politically, maybe you get another, big hit in cable, and that's what makes EG work. So, when EG is going up, it generally gives me a bearish view of the dollar when the euro's outperforming the pound. It also says the euro's your preferred long, not cable. So If this is happening here, I should still be looking for dips to buy in the euro. Coming into yesterday, I saw like a real nice little head and shoulders pattern developing, and I don't know whether to trust it because, you know, when I was looking at it this weekend, you know, we were here, so we made a new high, and that gives me a little pause. You know, it almost looks like a shakeout move last night. Now they're taking it down, but someone puts a gun to my head here. I'm looking at this 80 to 70 level as a potential buy with stops under the low. But you know what, I want to address this because I know we have a lot of new people flowing in and out of here all the time. So, you know, my handle's Forex Stop Hunter, and they go, well, Dale, how do you know where the stops are? And I'll just say, well, if you're along the euro right now, where would you put your stop? And 100% would say under this swing low. So that's how I know where they are. It's where everyone's, it's you know, the real demarcation line or a swing high, swing low. So, you know, when you have stops down here, because we've seen so many stop hunts, like say a guy had a stop over here, right, in the euro, and for about 10 minutes, it went above this line by about 20. So I teach to, if you want to use a swing high, swing low stop, to give it 25, 30 pips tolerance, just in case it turns into one of these, okay, and ends up knocking you out of the trade before the direction you were looking for. In this case, if someone was short, you know, they're stopped out here at 115.34, and you know, for a few minutes they went, oh wow, I'm glad I'm out, it's breaking out, but it only went to 50. Okay, so if you had had like a 25 pip stop, instead of being taken out of the trade, you're still there. So give your even your stops, give your stops breathing room, so you're not in the same, you know, everyone puts it 1 pip under those swing highs, swing lows. Don't do what everyone else does. Is it a deal? Give me a Y if it's a deal. I'm telling you, it'll improve. You won't be right the market, wrong the trade as much if you give your stops some breathing room. If you have to reduce leverage to do it, reduce leverage. Okay, so everyone was real worried about a crash. You know, I'm flat because I covered a lot of my bearish positions. And, you know, I trade ETFs, the triple bearish ETFs, and, you know, going home, the S&P didn't look too good, right? You know, closing here after failing Friday at this wick right here. This, you know, is what I thought might happen, is that we have this, and then this. And we get up here, I'm an aggressive short. And for me, aggressive is probably, you know, what some people would say is tame. So yeah, I think the S&Ps have a chance to do this before we get the big break. So, you know, if it's a C wave or a 3, whatever it is, this was one part of it. You know, maybe this is just one big A, and then we get a B, and then we get one more C. That's maybe a fib extension of this decline, which was 220. So maybe you get 360 from 2850, gives you 2,500 or so, which will probably overshoot because that's, you know, right back at these lows here from last January. And then I think you're going to have, you know, people really panicking. Maybe extreme, we get to 23, but in the big scheme of things, is it the end of the bear market, bull market? I don't know. You know, you're talking about maybe a 38% retracement or 23. And why can't we just, you know, have one good smash here and then blow off again? And a lot's going to have to do with, if we're down here into the December Fed period, I'm guessing that you're not going to hear that they may pass or say this is our last one. Okay. The hawks will suddenly be a little bit concerned about the wealth effect down here, in my extremely accurate and humble opinion. And in my extremely accurate and humble opinion, this is the best company on the net. If you're an FX trader, you're not going to find a stronger combination of talent and methodologies all on one site. You're not going to be able to hear Paulie in the morning before I come on. You're not going to be able to pick Blake's brain and Steve's brain all day long after Face is gone, as well as all the great traders that trade there, like, you know, I can't swear. Okay, no swearing in here. You know, we have rules, and Amanda does a great job of keeping everyone in check. And no one, here's my rule, even though I'm not here, and I'm sure it's enforced, okay? No one is allowed to root for somebody else to fail or struggle, only to rationalize their own inadequacies and psychological dysfunction, okay? And respect for one another. And any chart they show, they're trying to collaborate, edify. So those are the rules. But you'll find that in a lot of chat rooms. You'll have people coming in there hoping everyone else in there is losing money and they're making money. You know, it's a sick thing, but it's out there. It doesn't happen when I'm moderating a room. And, you know, I'd say Blake has a little bit of experience, like, you know, 15 years of wise trade and of handling the public and making sure that it's a conducive room. And you know, what's cool about it is, you know, these guys are, they're posting all day and night. Joe has said, you know, we got some pretty good crowds in there for Asia. So wherever you are on the globe, you know, you're going to have a great community to collaborate with. And at times, you know, some of the better traders in the industry are in there. And I'm talking about our team. You know, Greg has won award after award at FX Street. You know, I don't think he fixed the boat. You know, people love his Elliott work. Andre's harmonic, you know, I've been very impressed with. And Amanda posts all her trades live in there. I mean, just too many advantages to keep talking and talking and talking about. But as you could see, I'm a believer, and I've been around for a while, and it's the strongest team I've ever been part of. So with that being said, and sharing some of my views in the markets here this morning, I'm going to lateral the screen to Blake. He's got stickum on his hands. He won't drop it. And I'm looking for Blake to run a sweep to the left and get out of bounds to stop the clock. Can you do that, buddy?
Did you ever see that Stefan Diggs commercial?
Oh yeah, where everything sticks to his hands, the garbage can,
It's funny.
It is good.
Hilarious. I mean,
well, you know what? I've been seeing more one-hand catches than ever before Blake, and you know, I think Chris Collingworth last night, and he was a receiver, and he's a funny guy. He goes, some guy made a one-handed catch. I mean, the ball just, it was like a magnet went to this guy's hand. He goes, boy, I wish I had that stuff when I was playing.
Yeah, seriously. And you know, for if you don't watch American football, you don't know what we're talking about. But yeah, there's it's talent out there. Anyway, good morning, Dale, and good morning,
buddy.
We are, you know, it's actually been a fairly quiet session. We did a little juke session in the Euro overnight when I was sleeping. You know, we rallied above the highs here, and you know, after rallying above the highs, we just kind of reversed, and now we're down at lows. So it's a, you know, this this right here is not super surprising to me that we, hit new highs, stopped everybody out, and turn around. Fortunately, I wasn't aware, or I wasn't awake for that, and I haven't been doing too much in the markets, but but I did, short some Kiwi on late last week, and so I'm just trying to figure out what my next play here is at the moment. But the euros, it's pretty messy, and our office in Connecticut just made a point, of all the Italian banks are red right now, so that's a concern, and it's obviously a concern for euro longs. The euros come under a lot of pressure. The cable just broke through some support too. We've been holding this 130 level pretty much for the last, well, you can see since last week we were holding through here, and then we just whipped around, slid through the stops as well. As I alluded to in my week ahead video, the euro is still it's pretty messy. I'm not 100% convinced on anything that I'm seeing here, and when you're talking to the euro dollar, so the general direction, I thought the euro would squeeze a little bit at the open. It did, and then we've reversed everything, and we're coming right back under pressure. Now this is going to be really key, because if we come back down to this 114.30 and we break it, then we're going to have some serious issues. You're going to see a lot of, I bet there's a lot of longs out there that have been looking to play the euro to the long side, hoping that we created some sort of bottom. So if we actually flush through this level, we are going to go see 113, in my opinion. And I'm not short the euro, but I'm short the Kiwi. I wouldn't mind that at all, because then I would just get some, Me Too strength against the Kiwi. We would see the Kiwi price slip back towards 65 cents if something like that happened. So, and there are some signs. I mean, if you look around, there are some signs that we could see some continued dollar strength. We have the euro dollars under some pressure. The cable, obviously, we just pushed through 130, and it looks like, in my opinion, that we're going to go back and see 129. Sorry.
How's EG look to you, Blake?
First of all, the euro pound, I haven't traded it at all in recent weeks, but there's this, let me take you to this channel. Okay. So this previous channel, we broke through it, and then we were coming back up and knocking our head up against the previous channel resistance. We had broken out, and now we're back above the 200-day moving average. So it actually looks pretty constructive here. I can't imagine myself trying to buy the euro dollar right now. I can't imagine myself trying to buy the euro dollar right now, knowing that we have all these Italian banks under pressure. I think that's and with the with the risks that are associated with Italy, it's just not a trade that I want to take. Now, you have risk, obviously, with with what's happening with Brexit. So
yeah, maybe it's more of a proxy for a short pound than a long euro.
Yeah, maybe perhaps. Yeah, I mean that could be it. But in my opinion, there's too many unknowns between the EU and the UK to be too biased in the euro pound. I think it's more of a crapshoot than anything, if that makes sense.
Thank you.
Yep, sure thing.
I know what crapshoot is.
Yeah,
I've been to a casino or two, buddy.
Okay, so you know where I'm going with that. It's not clear. What is pretty clear to me is that the U.S. and China trade. Well, the meeting in November is going to be a head of state meeting, and it's not going to be a trade meeting, and Trump has said basically he wants the tariffs to bite. He wants China to feel the pain. So he's not wanting to negotiate on trade at this moment. He wants to let
probably means the U.S. consumer to feel the pain. Good morning,
exactly. Ultimately, it's going to end up being that way. Good morning, Steve. It's but he really wants the he wants China to feel the bite of this trade war, if you will. So that means that the Aussie dollar is going to have a very difficult time rallying, and same with the Kiwi. You know, the Kiwi has pushed up against resistance, and everybody that uses ForexAnalytix knows I'm already short the Kiwi and why, but we're right up here against resistance at the 60. And actually, if you watch the face webinar, you know that was really key resistance anyway. I think, one of the trades that we have to look at, and one of the things that we have to, be aware of, is where the U.S. dollar Canadian's at. And I think this currency pair there's risk of it breaking higher, especially if we get some risk aversion. Boy, if we get a little bit of risk aversion here, I think the U.S. dollar Canadian is, breaking above these highs. It's a good risk reward setup for a short. I'll put that out there right now. Like, if you just look at technicals and you just, and that's it, then this is a great short. But you have to also realize that if we break these highs, that we're going probably a lot higher. Now, I talked a little bit about just a moment ago about risk aversion. Well, you might say, well, what do you mean risk aversion? We're up today. We are up a little bit right now, but we're also facing some pretty key resistance in the S&P. So I personally, if I had to draw this out for you guys, I think that we are doing this, and we're going to break one direction or the other, and I don't think that break is going to happen today. I actually think that we're going to see something very similar that we saw here, it could be higher, but it also could be lower. When you have a triangle, they tend to be continuation patterns of the current trend, and the current trend, I would say, is down right now. So we're obviously longer term, starting to roll over. So I think the risks are actually that we move lower. And if we get turnaround Tuesday, well, then that probably, would explain that we get a sell off in risk potentially tomorrow. I'm not married to that idea, but again, for me as a currency trader, that would mean that I have to be on the lookout for an upside move in the dollar Canadian. That's why I know the risk reward is to be short here. I just don't know if that's the right trade at this moment. So, and if you look at like the dollar yen, if you guys have, you guys got the analysis on ForexAnalytix earlier this morning when we were trading up in the 80s, we're pushing up against some resistance here. There's a 50% retracement up here at 113. Joe, he was on Joe, who's one of our team members. He was on Real Vision TV, which is, what's the name, Dale? What's the name of the guy that runs that? Some of you guys would know. Anyway, it's pretty exclusive little TV show they got going on. Anyway, he was looking for 113 in the U.S. dollar Japanese yen, and we were marching right up against those levels. We're getting right up there, and so I think the risk at this point is that dollar yen could turn lower. You could see the stock market start to turn lower somewhere around these levels, and that means that the dollar Canadian could go higher, the Kiwi could go lower. Those are the trades that I'm kind of playing into at this moment in time, and I'm really not going to be convinced that the dollar yen is moving lower until we break back below like 112. So once we get below 112, if we get below 112, that's when I'm really more convinced that not only the dollar yen is going down, but the stock market is going to be moving lower at that point in time as well. But those are just some things that I've really been paying pretty close attention to as of late. And also, I guess I should mention this: you guys, the dollar Mexican peso has kind of fallen off the radar for a lot of people, following NAFTA and everything else. But one of the risks that I think is associated with the U.S. dollar Mexican peso is that we have a new president coming in, which he is, probably about as polarizing as President Trump. And I think once he gets into office, he may cause a little bit of ruckus in Mexico. Now, we even have one of our traders named Oliver. He's in our chat room. He moved from Mexico to, I believe he moved to Portugal. He moved his family to Portugal, basically for safety reasons. And he's given us a lot of boots on the ground insights about AMLO as he's coming into office, and he really worries for the country of Mexico, which I'll tell you what, from a technical standpoint, I looked at the US dollar Mexican peso, and I think the risk is that we head back above 20. And I don't know if anybody really is paying much of attention to the US dollar Mexican peso, but I'm not sure if I'd want to be short the US dollar Mexican peso with the incoming president. So with that being said, just technically, the US dollar Mexican peso does look like we're making our way back up towards 20. And that would also coincide with, the dollar Canadian moving higher, risk appetite moving lower, meaning stocks moving lower. So just some things that I'm paying a little attention to as well. And I'm not long the US dollar Mexican peso at this point. I feel like I should be, but that, just because I have, and this is a good point that I'll make before I turn it over to Steve and Stelios and back over to Dale, is just because I feel like if I sit here and I say, oh, the US dollar Mexican peso is going higher, that to me, that what that basically means in my mind is, if I close my eyes and I bought the US dollar Mexican peso and open them 2 weeks from now, it's probably going to be up here. Does that mean that this is the best place to get in? No. I hopefully can find a better entry point that serves better from a risk reward standpoint to be long a currency or short a currency pair. So just because I feel like eventually we are going here, that doesn't mean that we can't come down here first, give me a good entry so I can put a stop, then look to get long at some other, for the eventual move up here. So when I say, hey, a currency pair looks bullish or bearish, or there's reasons why it should be going higher or lower, it doesn't mean that I'm just going to say, oh, let's just step into the trade. Because strategically, as a trader, what we have to look for is we have to look for better, or the best, most optimal place to be long or short a currency pair from a risk reward standpoint. Just because you have a macro point of view or a fundamental point of view why you should be long or short a currency. I hope that makes sense to everybody, because that's how I approach the markets on a daily basis. If I just bought and sold everything that I thought was just a great buy or sell without strategically putting myself in a good place, I would probably get killed in the markets, because I don't approach the markets like that, because there are going to be better places to be long or short, not just that just with that idea. So anyway, now with that being said, I'm going to pass the baton over to my colleagues Steve and Stelios. Steve, good morning.
Good morning.
Hello.
Greg.
Hey, Stelios, how are you?
I'm very well. How are you?
I'm recovering. It was a wedding weekend, and I was the best man. So getting through this weekend was it wasn't as much as terrifying as it was for the two people getting married. But typically at my age, we don't go through a lot of weddings. So I'm tired.
I wonder, is it in English called? Is it in English called the best man because it's actually the guy that is not getting married?
Yeah, I tell you what, this is a friend of mine that I've known since we were 18 years young, and him and his wife, they've actually been together for 14 years. They just finally tied the knot because of timing reasons. They should have done this 7 or 8 years ago. It's just from family, personal reasons, it didn't happen. But unfortunately for those of us that that go, we and have to attend and be part of it. I'm glad I don't do that every weekend. That's for sure. There's a certain point in your life, as you guys well know, that there are a lot of weddings that you do, usually in your 20s and 30s, but not in your 40s.
Oh yeah, I'm exactly at that stage of my life. Actually, we have weddings like all the time.
Yeah. Oh man. I'm glad we're past it. But anyway, it's been a fairly quiet day, and I think we're gonna continue to do some consolidation. But hopefully, and as you'll probably point out, there's a lot of great setups in some of the cross rates out there. So
There are indeed.
yeah. So with that being said, I'm going to pass it over to you guys, and I hope everybody has a great trading session and a great start to the week. And thank you all for listening in and supporting us and our sponsors, Forest Park FX. Make sure you visit them because they make these webinars happen. And by the way, Forest Park FX, if you guys haven't talked to them about getting reimbursement program to get ForexAnalytix for free, so this way you can be part of our community, or about getting cashback rebates, especially if you live in the United States. I don't know why you haven't talked to them yet. So make sure you just reach out to them.
Yeah, even for free advice. I mean,
Yeah.
there's no strings attached whatsoever.
Exactly.
Or if you're very lonely.
Yeah, even if you're
Trent has a helpline.
He does. He has a very calming voice. He's one of those guys who talks to me like, everything's okay when I talk to Trent. All right, guys, have a great one.
All right, good hunting, Blake.
Thanks.
You do, Blake. By the way, one last thing I wanted to comment before we go into the charts, and actually before Stelios gives us some macro background, and then we can go into charts. Is Blake mentioned that Stelio, I don't know about you. For you, it might be different because I know that you take very long-term positions. But for me, I became a proper trader when I actually realized that, trading my macro thesis makes no sense unless you're willing to sit on a position like for, at least months. So I've seen a lot of people that really have a very good knowledge about the economy and, how things are working in an economy and about, the fundamentals.
And can't trade their way out of a paper bag.
And they've failed miserably as traders because, yes, they tried to trade in essence, short to medium term, with a fundamental thesis which might play out in years. Let me remind you an example that I remember very vividly. I remember tons and tons of traders losing their trading accounts because when the Aussie was stubbornly trading roughly at parity with the USD, there was a lot of people that were expecting that finally the Aussie is going to break down and it's going to break down, that it's going to break down, and it wasn't doing so for months. And of course, also overnight rollovers were against you if you were short, and a lot of people were, trying to play out this, this expectation, which of course it played out eventually. But up to that point, I know personally a lot of retail traders that, went out of the game, lost all their money. And, when it actually played out, they weren't trading anymore.
Oh,
so,
yeah.
So that's something to keep in mind, that it's extremely important to have a top-down analysis, but it's equally important to not let your long-term view cloud your short-term decisions. The only thing I now let my top-down view and my long-term analysis do to me is make me feel more comfortable in pressing more with positions that I believe also align with my fundamental thesis. So if it happens that they align, I feel more comfortable to, for example, use a little bit more leverage, although I'm not the kind of guy that uses high leverage anyhow. I almost never use more than 4 times leverage, almost never. Or I might hold longer to a position that is going in my direction if I believe that the fundamentals point to, a continuation. So that's what I wanted to say and share, because I think
Steve, it's funny you should say this, because people say this and it's a cliche, but I think it's very important. You have to have some kind of edge. When I was a market maker in London, I was trading short term everything. Like 95% of my trades, I would do 50, 100 trades a day. and they were all short-term, open, close, you know, and move on. Excuse me. I did have like a macro view on some, but that was a tiny part. And when I came, you know, back to Greece and I started trading PA, I thought I could do the same, you know, I didn't have the edge that you have when you're on a trading floor, right? And you have all the other people around you, and you get all the information. So it took me. I've said this.
Not only that, the speed also, the speed of execution, the zero spreads almost, etc. Yeah,
absolutely. So it took me like a year and a half to actually make any money. And you know, and you're absolutely right. You know, I trade quite differently to most people. I'm a more long-term trader, and I look at fundamentals, but I also try to look at technical levels for entry and exit points. You know, people know in the chat room that I'm not, you know, I don't have the best timing around, but you know, I take a view and I stick with it unless something changes. You know, so, and I use very little leverage as well. So it's interesting you should say that, Steve.
Use less leverage when you trade the market.
Speaking
use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage.
That's exactly it.
You know, I've had people they had to go to a psychiatrist because they couldn't get that out of their head. All day long, they're hearing that. Use less leverage. Go ahead.
Right.
So, Stel, anything from the macro side before we go to the charts?
Just a couple of things. We had Moody's actually leaving Italy credit rating unchanged, which was a little bit surprising.
After a lot of begging and pulling strings, yeah.
Yeah, so the euro saw a little bit of a rally, a relief rally overnight. That's given up now already.
Which has already been retraced. Yeah, which is something to take notice of. Yeah.
And the Italians, you know, in response to this letter by the EU officials that, you know, they need to have a look at their budget deficit again and revise it. Salvini, I think it was today, who said, no, you know, we don't see any reason why we should do anything drastic and all that. So this remains to be seen what they're going to do. But it does seem that the Italians are not going to just, you know, bend over. So I'm very interested to see how.
Yeah, Erdogan was of the same opinion until he actually bended over. You know how the markets are. They're ruthless. I mean, you know, if they believe that, you know, your situation is not going to work out, eventually you're going to force to do what you need to do. But having lost all the time and market faith, in essence, acting in response instead of in advance will have already cost you a lot. And unfortunately, as it seems, the Italians haven't learned from the lessons that so many other countries have even recently taken from the markets, right? Argentina, Greece, the other pigs, Turkey, etc., etc. You keep naming them. Yeah.
And it's funny how the country officials always use the same excuses. They say, oh, you know, it's these profit, you know, short sellers who are looking to take advantage of bonds. Right. You know, it's like they're not attacking you on you know, by chance. It's, you know, there's a reason why all this is happening. Anyway,
I mean, it's a populist, stupid excuse, because why would anybody, you know, sell short if they didn't actually believe that it's going to move that way so they can make money? I mean, and when they're long, why hasn't ever anybody attacked buyers? You know what I mean? I mean, so, you know, there is only a plan to sell on occasion, but there is never a plan to just keep buying something. I mean,
Anyway, it's a long discussion, but so the other thing that happened this morning, and that's brought a little bit of a weakness to sterling, is that the DUP, the Democratic Unionist Party, I think they're called, the Northern Irish Party, who have this coalition with the Conservatives. They said effectively that they're going to support a motion to make what the EU is proposing for the backstop on the Northern Irish borders to make it basically unfeasible to make. So that's brought the market quite a bit of jitters to the market, because that seems now that this may not be an option. And our friends, whenever I talk about sterling, a pound in the UK, our friends always say, all these things, they have to get passed by Parliament, yes, and they have to be approved. And then you take a step back and you look at the DUP. Okay, these people are now in government. It's their only chance, and probably their only chance in the next decades to ever be in power. What do they want? Why are they doing all this? And I'm putting my cynical cap here, and we know what politicians want, right? Why they're in politics, and hint, it's not to make the country better. Most of them have more.
At least not most of them, yes.
Yeah, most of them have more selfish reasons. So eventually, these guys as well are just looking to bargain. They're putting pressure, and they want something. What is it? I don't know, but eventually they're going to get it, whatever that is. There's going to be some kind of fudge that satisfies everybody. Otherwise, what are they going to do? They create all this trouble. Then we have this massive no-deal Brexit. Everything goes to hell in a handbasket, and they disappear from the horizon and never reappear. Because that's what's going to happen.
And never take responsibility for whatever actually they planted in the minds of the average person. Yeah.
And effectively, they haven't achieved anything either. So why do all that? Anyway, this is my cynical self talking again.
Speaking of which, Dale, this is the chart I've been showing for a long time. And if you remember, I kept insisting, even when we were climbing higher, that to me, anything between 130 and 133 is simply noise. So I really didn't care seeing, by the fact that I didn't change my thesis at all, seeing the fact that the cable was, rallying towards the 133 zone, let's call it again, because as you very well know, I use zones because, using a single level in the market, I mean, nothing.
I do too.
Physics. Yeah. So seeing it getting rejected from the bottom of that zone and seeing it now attempting to break below the 130 zone, and at the same time, this ascending trend line support, and I'm showing it because Blake showed his chart, but he has a different drawing here. I'm viewing it, from a different pair of eyes. Of course, he also mentioned the importance of 130. There's no question about it. But for me, if we do close below this area on a daily closing basis, there is a very, very high chance that we will be seeing another leg lower before we can see a big rebound. So
I agree. Actually, I'm looking to go get long pound, of course, barring any disastrous outcome in the negotiations. But if we get cable getting close to 126.5, that low from August, maybe it wants to go there, flush out some longs, and then reverse. I don't know.
The market is very filthy. If we get down here, Stelio, I first think that we're going to breach through it. So as you said, anybody that was long from here can first get kicked out of the market.
Yes.
And then we might see like a big reversal. So I wouldn't be surprised at all if we saw the cable probing below 126. Before seeing like a bigger rebound.
Yes.
So that's what I think.
126 is my target to get long, and euro sterling just above 90, so 90.5, I think, if I recall correctly. I have to look at my chart again, but I'm not long sterling yet, but I really, really want to get long, and sterling Kiwi, the other one we'll look at.
Let's have a look at euro sterling. It's a good point. Let's have a look at euro sterling, because euro sterling, first of all, after breaking out from this descending channel that actually kept us trapped for like 9 months, whatever the hell it was, we then failed spectacularly, and we seem to be moving lower. I'm actually tracking this descending channel. We overthrew it by a little bit, and we're now retesting. This is a very, very critical support resistance area at 88.50. So to me, it's quite important to see what the market is going to do from here. But the fact that we did falsely break out from this descending channel is a little bit troubling to me. Also a little bit troubling to me is the fact that the RSI printed below 30, which in the vast majority of the cases is what coach would call like a confirmed low. So I wouldn't be at all surprised if we see a failure and another leg lower here. Of course, that can happen either because we see a rebound of the cable or because we might see the euro for X, Y, Z reasons. Italy, for example, is a very good excuse to underperform what the cable is going to be doing for a period of time, right? Having to do with the euro before I go to other pairs, because there are interesting things we can view here. As I've said many times, and I had this discussion with an uncle of mine that has almost all his money. He has always been working abroad, and he was in Patra with me now, and he was asking me about his reserves. So I told him that having to do with the euro, in my opinion, as long as we're trapped in this zone like 114.50 to 118, we might still get chopping around here. But if we break below 114.50, I think we should see an extension, and we're not far away from that. So I have absolutely no bias. I haven't traded it for quite some time, and I feel quite fine for not doing so because, as you see, this is not the kind of trading environment you would want to get involved with. Of course, might be a paradise for, let's say, scalpers or day traders, but personally, I trade completely differently. The only clear moves that have happened recently is one, the breakdown from this triangle, which actually took us down to 113, because this was a textbook triangle. So when we broke down, it was more than obvious that we're going to see some kind of an extension. So that was more or less textbook. And the other one was the breakdown from this ascending wedge, which would bring some downside. But if you look at the bigger pictures, as I said, with the exception of this little probe below 114.50, we've remained stuck within this range since, when was it? May, middle of May, right? So let's first wait to see what's going to happen from here, and we take it from there. Now, having to do with the USD yen, very briefly, I want to say that yes, I also believe that this rebound is going to fail, but most importantly, I'm tracking this ascending wedge, because if we do break below this, there should be a lot more downside coming for the USD yen. So I'm not trading it currently, but I would say that anywhere between 113.10 and 113.50 would be a very nice risk reward opportunity to be looking for at least one more leg lower, and more or less the same applies. By the way, let me remind, actually we didn't say that all. So let me say something. Our Joe Perry is going to be again on Bloomberg. I remind you that he was again on 2nd of October. He very correctly predicted the turn lower in the markets. I mean the stock markets, and he's going to be on Bloomberg tonight again, 2:30 Eastern time. I think that's what, 6:30 GMT, like 18:30 GMT. So he's going to be on Bloomberg TV once again to get it today. So I suggest you watch it. It's usually like a 5-minute thing. I don't want to, give you a hint what he's going to talk about, but I think you should really watch it. He represents ForexAnalytix, and the vast majority of his ideas have panned out very nicely. Now, having to do with what's going to happen with risk. In my opinion, there are 2-3 different scenarios. Of course, somebody can say, but you can say that for any market. Not exactly, because in any case, my thesis is that we're not done moving lower. So is this going to end up being, for example, I'm taking SPX because the S&P is considered the benchmark for risk, right? So is this going to end up being a triangle? So are we going to end up consolidating like in a little range between this high that we had last week and that low that we found on October 11th? Might be the case. We don't have much information yet. We don't have much price action. But personally, I'm really crossing my fingers and hoping for the other alternative, which is another leg higher, hopefully towards the 61.8 of this move lower, towards the 28.50 level, even up towards this horizontal support resistance area, which approaches 28.70. I will consider that a godsend gift, because from a risk reward perspective, it's going to be an amazing short. I'm already 1/3 of a position. People in the chat room know it since the moment I did it. I'm already 1/3 of a position short from 28.14. I did not book profits, although it was deep in the profit, simply because I'm not trading this, and I don't mind at all, even if it goes out of the money. I don't want the market to break down and me having no position here, because I have very high confidence that we're going to see at least a retest of the lows, if not lower than that. So I have no problem holding this position, even if it goes out of the money. I want to add to this. I believe this is going to be a good trade, and I want to be in with a bigger position instead of a smaller position. Okay, I already made a very nice trade, took 6.3% profits from almost the highs to almost the lows. So, and I've had a very good month with my rest of the trades, like crude, etc. So I have no problem taking this little risk in my mind. The market is quite clear. This kind of technical breakdown is indicative of a specific technical damage. So even if this proves to be a corrective move, it's not over yet. For me, a major level that's going to act like a magnet is the 2690 area. Why? Because from the lows, from the crash lows that we had in the beginning of February to the high, this is the 61.8% fib. It's also a horizontal support resistance area, roughly there, 2687, 2692, roughly in that zone. So I would at the very, very least want to see a retest of that zone, if not lower towards 2600. So as I said, although I already have a position that's in the money, it's only 1/3, I would rather see the market jump higher so I can add to my position than see the market break down from here, which is a possibility, right? So keep that in mind. So this is my, my thesis about the S&P having to do with the DAX. The DAX is clearly trapped with the neckline of the head and shoulders formation at 11,800 now being a ceiling, which is going to be very tough to break. When we tested it, we broke down again. And now we also have this confluence of supports a little bit lower than 11,500. The chances are much higher that we're going to break below the horizontal support instead of the horizontal resistance, in which case I do think that the market has no real big support until it meets the 10,800 level. So I think there is a lot more downside once we clear this horizontal support. Until then, I find no reason for somebody to be looking higher. Now, FTSE making a rebound here, but the rebound so far doesn't look impulsive to me. The move lower did look so, though. So we're currently testing resistance at 7,100. I would definitely be careful here. But even if we clear that, I would then watch very carefully for this area, the 7,250, because it's on sell the rally mode now. Same deal with the Nikkei, because after breaking to 27-year highs, it failed spectacularly, and it seems now to be consolidating again between 22,000 and 23,000. But given the fact that we had a false break higher and the move lower looked impulsive, it seems very, very likely to me, as I was saying when we were trading here, that in my opinion, the chances of breaking above 23,000 is a much higher likelihood than breaking lower. Now it's the exact opposite thing. So in my opinion, now the chances of breaking below 22,000 instead of above 23,000 are a lot higher. That's why you've seen me draw this. So I believe that the next move out of this range that we've dropped back in is very likely lower. And that's why I also believe that this rebound in the USD yen has a very high possibility of failing. I'm not going to go over things like the USD CAD because I'm seeing exactly what Blake is seeing, currently testing resistance. You can even see the potential of an inverted head and shoulders formation. If it breaks above this resistance, I think there is a lot more upside. So keep that in mind. But on the other hand, Blake said very correctly that, since we are on a resistance, if you want to be short, this is the place to do it. And if you're wrong, same thing with the Kiwi. For those of you that know it, I already have a pattern in play in the Aussie Kiwi. Aussie Kiwi found support in this support zone, but in my opinion, the fact that we've broken below the 1.083 to 85 zone is very important. So I'm looking lower. This is one of the positions I'm currently holding. What else? Because we have quite a few things to cover. Let me go through questions. There's a question about Dow. There is a question. Steve, what is the correlation between indices and the respective currency correlated inversely? Yes, yes and no, depends. Let me say it like that. They're not inversely correlated, but a strengthening currency does not help the index, and oppositely, right? That does not mean that you cannot have at the same time a currency and its index rallying at the same time. It can often happen, but let me say it oppositely. Ceteris paribus, if everything else was the same, and the only thing that changes is that instead of having, let's say, a rallying currency, you had a currency that was not rallying, the index, let's say, in the example I gave, would rally even more. And the opposite, right? So if you have a depreciating currency, the index is going to overperform in comparison to what it would be doing if the currency was not depreciating. And that applies mostly, the smaller the market, it applies more to that because, more foreign investors. So for them, what that means having to do with the denomination in the currency that they're actually investing from plays a big role. I don't know if you cover natural gas, but is it possible that you have a look above a big triangle starting in remind me the ticker? Yeah, we've seen it in the past a few times. Is it N gas? What was it? Yeah, okay. So we haven't seen that in a long time, but I see what you're talking about. Perhaps you're looking at this trend line, still trapped in a range. That's what I'm going to tell you. Watch this trend line very carefully. If we break above it, obviously this is a very bullish scenario because I would expect, even in a correction, I would expect one more leg higher. On the other hand, 250 something has proved to be a very, very strong area of support for the market, right? Now, in the shorter term, yes, you're right. If that's what you meant, this looks like being a small triangle. So I would assume that in the very short term, the next move is going to be higher. But now, what matters mostly is what happens. Let me change the color so we can see it more clearly. When you break out of this red triangle, if we break to the upside, which is a likelihood, what happens with the blue trend line? Because that's quite important for the market. Okay.
Using a real-time example of a pro who hasn't looked at a market for a long time can pull up a chart and have instant recognition of the structure of the market. You just saw it real time.
Thank you, Dale. And they also see it with Greg. I mean, Greg, we often give him like a chart that he hasn't had a look at all, and he immediately starts.
Right.
Okay, this is impulsive. This is wave 1, 2, 3, blah blah blah. Yeah. And you know something. And you know something. I say that and I repeat that all the time. If you have even an average IQ, and you're willing to put the work and the screen time and be patient, you can become a good trader. But you need to realize, first of all, that you cannot, even if you are like a super genius, you cannot become a good trader over a night, over a week, over a month, because as you've said very correctly, Dale, 1,000 times, you cannot teach and you cannot learn experience unless you go through it, right?
Yeah.
And unconsciously, by watching price action, your brain gets aligned with how the markets work, and even subconsciously you start noticing things and you start remembering equivalent, let's say, types of price action. So even sometimes that you can't interpret it with, let's say, a specific technical information or whatever, you have a strong feeling about what the market is about to do. And that is something that nobody can teach you. You can learn it by putting the time. No other way of doing that.
Not only that, Steve, I also teach surround yourself with traders better than you. So, I think it's a big advantage for people that are learning. It is also for people that are making a living trading to be part of a community because you only have 2 eyeballs. And other people are going to bring your attention to something you may not have seen on your own.
Yeah, And we have more questions. I know I don't have time to cover them all, but I promise I'm going to cover them tomorrow. But let me say that we didn't build a chat room for no reason at all. I mean, I can talk to you. You know, I'm a very cynical and honest guy. I can talk to you from a very cynical perspective and tell you that the chat room is also a good retention tool, etc. But I can tell you one thing for sure: every single one of us enjoys spending time in the chat room because we have people there that contribute and help us as well. Because that's exactly what you said. You can have 50 pairs of eyes, and we have some extremely good traders in the chat room with us.
Yeah,
And
Steve is a little stingy spending money on his friends and family, but when it comes to the website, there's no cost that he will, not go ahead and do if it's for the betterment of the company. Is that a correct statement?
It's correct statement about the second, but unfortunately, I'm the opposite of stingy on all aspects. But yeah, let me tell you something and say it very honestly. The chat room, especially if you're ForexAnalytix member, and if you're not, it's a good reason to become one. It's invaluable. Honestly speaking, it's invaluable. I mean, you get
you think it's invaluable?
Yeah, it is. It is.
Okay, that's a wrap.
It is. It is. It is.
That's a wrap, Steve.
Okay, and before you go to the interview, let me say I see questions. I had a lot of things to talk about metals. Unfortunately, I didn't have the time because we had a lot to talk about. I'll do it tomorrow. I have a question about the Nifty and the Dow. I'll talk about them tomorrow. Okay, I promise.
Okay.
Let me just say one thing for the metals. Palladium seems to be breaking out from the triangle I saw. So palladium and copper seem to be trying to break out. I'm going to show those tomorrow. So enjoy the interview, and we'll be here again the usual time.
You.
Right?
Thank you, buddy, and a great example of analysis on the fly that only really pros could do. Okay, Kip, I see you. You're logged in twice. I don't know if that's going to affect sound quality or anything. I'm going to make you the presenter. I'm not sure if you want to show any things. Otherwise, I'll take the screen back and show your website. But great to have you back, Kip. Let's see. Oh, I'm showing.
I unmuted him.
Okay, thank you, Steve. Hi, Kip. How are you?
Great, Dale. How are you doing, bud? What a great morning call so far. I really enjoy what I just heard there.
Oh, thanks so much. Yeah, we have a good time, and our mission is to build up and edify traders every day. So that's just what we do. Do you have anything you want to show on the screen?
No, not at all. I just want to give you a compliment and give you a shout out because you and I first met a couple of years ago, maybe longer than that, probably through Twitter, if I remember correctly. And you're one of these rare guys and one of the really good guys that I know in the business that edifies others, builds others up, invites them on to their really competitors in a lot of cases onto your program. I know nobody else doing that. So big hat. Tip of that cap to you guys. I listen to you as often as I can and appreciate your great work.
Oh, wow. Thank you so much, Kip. And that's a great segue into your work because last time you were on, there was, always a debate, longest bull market in history, due for a 10, 20% correction. And I recall you were constructive, especially in bios, and you were correct. The market continued to go. Also want to tell the listeners, viewers, that you're not the typical newsletter guy that's just trying to beat the S&P. I don't know what you're trying to beat, but you're much more aggressive, loftier goals, and that you've accomplished it many years, a very high return. So you know how to pick good beta in stocks. Am I accurately describing you, Kip?
Probably that's about as close as anyone has gotten. My mentors taught me how to do what they do, and I'm just a good old Texas boy. I had two of the best mentors in the business, Michael Metz and Ted Parsons. Rest in peace, to both of these great gentlemen. I think we talked about them last time I was on.
Yeah.
And what they really taught me to do was to do combined fundamental and technical analysis. So I'm about 70% fundamental, 30% technical. I'm very aggressive. I use leveraged ETFs based on my investing system that I've built over the last 30 plus years. So I combine leveraged ETFs, timing the market, And then I also had the typically we never hold more than 12 stocks or holdings at a time. I combine the leveraged ETFs with growth stocks, small cap growth stocks. So we typically hold about 4 or 5 of those. We have gold and silver mining stocks, and then leveraged ETFs, but never more than 12 positions at a time.
Very concentrated.
Yeah, very concentrated, because I'm for the person that wants to crush the markets, and I make no bones about that. We've beat the S&P 500 14 of 15 years, up 2,300% net gains since beginning of 2014. And right now, getting crushed, just being candid with you, getting crushed in 2 positions in China and housing, which I'll be buying more of today, as a matter of fact. But other positions, we're killing it. We've got, we're doing well. But it's been a tough market. It's been a very tough, very confusing market. I do not like the fact that we only have, 2 major global indices above the 200-day moving average.
Yeah.
That's very concerning. But October's gives us our best buying opportunity. So I think this is going to be one of those.
Okay. So then your tune, despite the fact that there's more of a two-way market, kind of like there was in January before we made new highs, and this two-way market, actually, that's what makes a market. I'd love to see 2850 to 70 in the S&Ps for short for one more break towards the Jan lows. I think that's a possibility. But after that, I think it's very important, very probable that we get another blow-off wave to the upside. I'm kind of thinking, Kip, that it might be because Powell, who has been talking hawkishly again, that if we're near 2,500, 2,600 in the S&Ps, he won't be as brave. Do you think that has, I know that's not why the market goes up or down, but do you think that could be a catalyst for the market to return to the upside?
I think it's what you just gave is matches my view almost identically. What Jay Powell has done is really set the markets up, I think, for a phenomenal rally into the first quarter of 2019. Rate hikes are probably just about done, and that'll be the surprise. That'll be the surprise to the upside.
Yeah, because all the dot plots are looking for multiple rate hikes next year, and the yield curve's on the verge of inverting all of this. So, I would say it's a very contrarian stance to say exactly what you just said, that the Fed is almost done or they will be done in December.
Yes, and what they're looking at is what I look at, which is employment, consumer sentiment, and the freight transportation index. Those 3 indicators, if you're looking at, as a regular investor, looking just for the best possible signs that you can find that the economy and the stock market, because of course they are connected, that both will continue to improve. We've got all 3 of those indexes still hitting new monthly highs after monthly high. The market does not reverse for up to a year until those 3 indexes begin to decline, which is, again, has not started to happen yet. So, when I got into business in 1985, the Dow Jones was at 1,200. I'm going to continue to take the approach that buying the dip is the appropriate course of action here.
Okay, I know that you were last time we talked, you were a big proponent of the biotechs, and they peaked, back right around the same time in June, and they're back at April support level. Do you have the same feeling here on biotechs, or is there a possibility, they almost look like the semis look very weak to me, that we could even take the IBB back down to this level? If you could see my screen, Kip, what do you think?
Yeah, I do see that, and I follow the XBI more than the IBB, but both look like death right now.
This is XBI, yeah.
I think that this market is not done going lower. Let's just call it like it is. The internals, which we follow very closely here, breadth, new highs, new lows, 52 highs, 52-week lows, are just brutal. These are now worse than even the January 2016 numbers. So, again, I buy on pullbacks as a long-term investor, but I think we are probably headed lower in the short term. I'm with you. I would probably sell any big rallies we get here. As far as biotech, I'm more, when it comes to biotechs, we've gotten out of the biotechs with the exception of one position, and that's Cara Therapeutics, which is still up about 70% this year. And it's a stock that I think everyone can buy here. This is a $100 stock trading at 19 to 20 today.
Okay, you know what? I saw a great thing on Twitter, and it made me think. You know, a lot of us, you know, shorter-term day traders, scalpers, and stuff, we all pat each other on the back. Great call, like, you know, if it S&P rallies to, you know, 28.5, and I'm right, I'm short. It takes out the Feb lows, but you know what? It's not about making great calls. It's about having great holds. HOLDS, because you can make a great call. The challenge is to be able to sit with the position through all the noise, and have that kind of patience. I think it takes more patience to hold a position than it does to wait to initiate a position. What do you think?
That's wisdom right there. And, you know, I didn't expect to hear that from you this morning, to tell you the truth, because I know you guys, you have a lot of traders here, a lot of short-term guys, and I love hearing that side of, that's not my style of investing, but I love hearing people that you know, that specialize in shorter-term trading. I am more of a long-term guy. I have one position I've held for 10 years.
Wow.
and it's still yet to really do what I believe it's going to do. But
it's almost like having a child, Kip.
And you do get attached, and I know that a lot of people say that's an investing mistake. You shouldn't fall in love with your investments, but I disagree. I believe if you find a great company with great management, why not fall in love with them? That's been my, and I think that's one of the reasons we've been able to beat the markets, is because we are, you know, patient, long-term investors. The money's made in the waiting. That's our approach.
Okay, well, I'm looking forward to falling in love with the gold shares, but later on this year. And you talked about the golds. I don't know if you're trading individual issues or you're trading silver shares or the ETFs, but here's the nugget. And, you know, we've had a recent decent rally in the gold. Actually, I think the metals are outperforming the shares. And I'm thinking, you know, maybe gold has a little more left in it, but I'd love to see one more washout into the end of the year. And want to ask you this, because you're a stock guy, is that, you know, anyone who's held this all year, even though we've had a little bounce, they have losses. And now we're entering this time frame where people start to play tax games, Kip, you know, where they're going to, you know, do their tax selling to take their losses so that their gains don't look as good. Do you think that the golds might have one more washout left in them, and part of the pressure on those shares would be if anyone bought them anytime during the year, they're losing money?
Yeah, I'm a trend follower. So the 200-day moving average is pretty much everything to me. And until we get gold in GDX, which of course is the non-leveraged ETF for gold, until we get those back up the 200-day.
It's also more of the blue chips.
That's right.
These are the juniors. So yeah, there's a big difference between GDX, but the pattern looks pretty similar. I'll pull it up here. And 200 moving is going to be the signal for you.
That's right. And I want to see, I don't like to hold an investment that trades under the 200-day for more than 7 trading days. That's our signal. And the reverse is true as well. You got to stay above the 200-day for 7 trading days before we take a position. So, and that's, by the way, speaking of kind of more of a big picture macro point of view, that's another big tell, I believe, as to why we don't have any major global systemic issues. Gold has refused to catch a bid. And in my career, that's always been the telltale sign that we have some kind of big, you know, some trouble brewing beneath the surface when gold begins to catch a bid. That just has not happened. Yeah,
Larry Williams used to say it's very unhealthy when the gold is going up with the stock market, because it's like a patient having a temperature. The higher gold goes. So, you know, like the market is sick. But, yeah, look, well, so we talked about that the Fed might be done. That could be the catalyst. Maybe you know, when the Fed is done, the dollar strength ends, and that could be the catalyst for a liftoff in commodities. So you think that's a potential scenario? And how do you like the way I interview myself?
You answer your questions excellently. I'll just say that. mining stocks always lead the way, and we've not really seen that kind of divergence yet. So that's what I'm looking for. That and a break above the 200-day, and I'll get excited again.
Okay, so what Kip is saying is he'd like to see an example where the bullion is making new lows and the shares are not. That would be a very classic situation. Write it down because you might see something like that near the end of the year.
January fact, absolutely. I think this will be a group to own in probably early to mid-January.
How about the oils with everything that's happening?
Early to mid-December, I meant to say, yeah.
Okay, anything that you see in the oils and natural gas is looking okay, any other commodity area, and are you staying away from any kind of bond?
I'm a big oil bull and was bearish over 100, turned bullish at 32, and so we've been acquiring 2 or 3 positions since then. Used every pullback pretty. Oil looks like it's headed well over $100 a barrel, and who knows why. I think right now it's the fundamental side of the story is flipped so much that the producers have not caught up yet, and it's really a supply-demand issue. But for those that are aggressive, one of the positions we have right now, a 3-time leveraged ETF, is ERX. That's the 3-time leveraged ETF for energy stocks.
Let me pull it. Got it. Okay. Yeah, it could be setting something up here. So, crude peaked. We had a little bit of a 3 driver in the crude. So I'm wondering if you have any levels that you're looking at for crude itself. So, here's the picture.
Well, we do monthly dollar cost averaging, so I don't really have levels as much as when I've got a couple thousand subscribers all over the world, and essentially, I can't. I was a broker for 15 years. I can't be a broker to 2,000 people that are subscribers to my newsletter. So, so what I essentially tell everybody is, you all have different price points you paid for our positions. Essentially, what you want to do is every month pick a date. Add to your favorite positions every month, and when we need to take profits, we will. And otherwise, you're buying every month.
Okay.
We typically hold positions for about 2-3 years.
Yeah. So just take a picture of this. The next time you see a 1, 2, 3, you'll know correction is coming. That's one of my favorite formations. But I agree, and a lot of it is geo. I really do believe a lot of this is geo, and there's so many different pots. Bubbling on the stove right now, Kip, that any one of them could begin to overflow, and I think I think to get over 100, we'd have to see something happen in the Straits of Hormuz. If you're looking for that. So, all right. So, and that ETF, let me get back to that ETF because I'm going to buy some when I think the time is right, because I'm a professional guesser. Okay, and I'm going to try and guess the best area to get in. Let's look at the weekly on it. Yeah. I'm kind of thinking, Kip, that it's possible that maybe everything, even if we get a rally, and the S&P's back to 28.5 or so, that it seems like everything is kind of heavy. Maybe we just have everything going down into this time frame. While sometimes when the dollar's good, nothing else is, and we have everything going down into the end of the year, December, something like that, and then all boats, different degrees. There might be different degrees of relative strength, but it seems like everything's heavy to me.
The market went up in the worst months of the year. When the market typically goes down, the markets went up. So it wouldn't surprise me at all to see the inverse of that take place in the year end. However, having said that, you've seen like a lot of us have, I'm sure, these midterm analytics. I mean, since 1946, we've had 18 midterms. We're up 100% of the time over the next year. So we got to get to November. According to this, we got to get to November the 6th. If we can survive till then, the average gain has been 15% since 1946 post midterms. Again, 100% that's the kind of pattern that I think most people like to invest in.
Okay, well, I would just keep this in mind in November, that the bears feast on Thanksgiving and the bulls do on Christmas. I'm just throwing a lot of this.
You need to write a book. These are all,
I'm
like Stock
Jimmy
Trader's Almanac. This is good
yeah,
stuff.
So I got it like Jimmy Durante, who you don't remember. I got 1 million of them.
Oh, yes, I do.
Okay, so what else? We've covered commodity sectors, very bullish. The oil sector, thinking the gold is going to be good. What are there any sectors you're avoiding?
Yeah, the ones I don't own.
Okay, that's right.
We're out of the small caps. Again, the charts.
Oh my God.
On the small caps, and again, that's been a real surprise. But I'm more of a kind of a longer term macro guy, and the thing I keep coming back to when I look at these global charts, and they just look like death. I mean,
there's a Russell.
They've just been crushed. Russell looks like China. I mean, they're just crushed below the 200-day. But the macro point that I keep coming back to, and the one that's held up my entire career, has been that a strong U.S. economy equates to a strong global economy. And I believe what's playing out here is this reversion from globalism back to nationalism that's taking place all over the world. Everywhere you look, it's happening. And I think that's going to take time to sort that out. And I think the long-term result from this is going to be hyper bullish. And the long-term targets. I mean, I think 40,000 by the end of Trump's first term is likely. Remember when Reagan got elected, and it took him a couple of years to get tax reform through, but once he did, the Dow Jones doubled in less than 3 years, and that's right when I got into business. So I have that's fresh in my mind. So I believe the macro picture is hyper bullish.
Yeah, so if we do get this shakeout, and it'd be classic, everyone's going to panic under the Fed lows, right? And by the world will be coming to an end. That we go to those levels, maybe 2,300, and I'm not sure what 40,000 Dow equates to. Could it be like 4,000 S&P?
I'm an old school Dow Jones guy, but 3,900 S&P 500, sure.
Okay, all right. And so the groups that you're favoring now most likely would, that might be the time to load up on oil and gold and everything. Is get ready to have your list ready, and when the rest of the world is panicking, should those lows be taken out, you start wading into the market. So do you have a certain amount of cash that you recommend people have for an event like that?
Yeah, I always recommend you keep at least 20% cash. And right now our VRA system has 7 of 12 screens that are bullish. That's the lowest reading we've had this year. So having a little more cash than that probably makes sense. But back to your previous point, my mentors taught me it's not a stock market, it's a market of stocks. So that's really what we try to target is let's find our favorite positions, let's wait for them to get cheap, and then let's add to them.
Yeah, and so maybe we're entering an era, you were talking globally, of differentiation between emerging markets and China and the U.S., and maybe their pressure is what's finally catching, putting a little pressure on us, and that, we'll lead the way on the next big advance, and there'll probably be bear market rallies, that it's possible even within our own market that stock picking becomes even more important because of all the vicious sector rotation and the passive investing that's become so popular by just buying the spider will not be the way to trade the market, that stock picking will, and managers that can see that, which have been fighting a trend of people thinking, all I have to do is buy, this ETF, could change. Think that could change?
I do, and but I've always thought that. I mean, I'm a big Peter Lynch guy. He averaged 28% a year for his career in Fidelity Magellan, and that was always his approach. Invest in what you know, stay away from things you don't know, and then be a long-term investor. You make most of your money in your positions after you've held them for 3 to 5 years. and that just works for me. That way I can sleep easy at night. I'm not a day trader. It doesn't fit my trading mentality. But I think this whole there's gonna be a day of reckoning for everyone moving to passive investing in these ETFs, and there's going to be probably what I would expect, and this could happen this month. It wouldn't surprise me at all if we had another one-day flash crash, something like that. And that's what's really happened 2 weeks ago with the 1,300-point loss in the Dow Jones. You saw the bids just disappear when all these trading systems got on the one side of the market. And that's my biggest short-term concern, and I think that's what we're seeing in the charts. We're probably going to get a one-day or two-day event like that that'll freak people out. It won't be a crash, but it'll be enough, as you said earlier, to get us below those January, February lows, and then maybe even back to the same levels of oversold we got to in 2016, which was, brutal.
Well, you know how if history is a past guide, they didn't ring a bell up here in February, Kip, and look, it took 2 weeks. It's a weekly chart. So up, maybe down. Yeah, it's gonna, gravity. We have like an Isaac Newton market for a while. Why don't we wrap it with your highest conviction idea going into 2016?
Into 2019? Are we going back in time? I'm good with that. I'd love to. That would be awesome.
You could go back 3 years and look at today's price. Yeah, no, 2019. Yeah, I turned the 9 upside down, Kip.
All right, I'll give you two. I'll give you a mid cap and I'll give you a small cap.
Okay.
And both of these, by the way, are up about 70% this year. We've had a pretty good year in this rough market. Cara Therapeutics, I mentioned earlier, symbol CARA. Trading at about just under $20 a share today. Amazing biotech that almost nobody knows about, market cap less than $1 billion. And then my small cap is Patriot One Technologies, a Canadian company that should have, and the stock's up about 90% this year. Patriot One Technologies should have all of their weapons. They have weapons detection systems that are unobtrusive. Like you don't know they're there. You don't walk through an X-ray machine. It works on cognitive microwave radar. And that's a Canadian company, Patriot One Technologies. U.S. symbol is Paul, Tom, Oscar, Tom, Frank, trading at about just under $2 a share right now. Those are my two ideas for the next 12 months.
Yeah, I think they had that on Star Trek. Huh? Didn't Spock have that, buddy?
Yeah, they did. But yes, that's exactly how we get zoomed up. That's right.
Kip, what a pleasure talking to you, buddy. I hope you have a great fall trading season. Thank you so much for coming back. Lots of respect I have for Kip. If you have an interest in equities and you want to be aggressive, and I know everyone who's hearing our voice is aggressive because you all use leverage, check out Kip's website here. Right here, www.vrainsider.com, and you could follow him on Twitter at kharridge. Thank you, buddy. I hope that dollars and pips rain down on you, and if I don't talk to you, finish this year like a warrior.
I follow you daily. You're one of the really good guys in the business. Proud to call you your friend. Thanks for having me on, Dale.
Yeah. All right. You're very welcome. Everyone, that's Kip Harridge. Follow him. This guy has conviction about what he does. And that's a wrap. I'll see if we have some turnaround Tuesday trades for tomorrow. I'll do a little work and see everyone then. And remember, most of all, don't just count your pips, count your blessings. Enjoy the rest of your day. See all our members in member chat. Maybe I'll drop in, say hi. Adios, everyone. Thank you again, Kip. And that's a wrap. Goodbye, Face.